Morningstar's latest report on multi-sector funds does not paint a pretty picture. Like many investment products, these funds have suffered negative returns. For most people, however, they are exposed to these funds through the default option in their superannuation fund. Today I have Sally-Ann Cook with me to speak about whether there is some hope. Sally-Ann, thanks so much for your time today.
Pleasure, Christine.
Sally-Ann, what sort of asset classes do these multi-sector funds invest in?
Typically, multi-sector funds can invest in a diversified range of assets. So in there you will have obviously Australian equities, international equities, listed property trusts, some fixed income, some cash. Also, some other multi-sector funds may also branch out into some alternative assets, so hedge funds or perhaps infrastructure assets and perhaps some unlisted property. So you're getting a diversified range of asset classes within a multi-sector fund.
And what are the main types of multi-sector funds?
Typically, again, you would have a choice of perhaps a single manager multi-sector fund, which means, perhaps a manager that has expertise across a range of asset classes is using their in-house expertise, so in equities and in fixed interest. There are other multi-manager funds where the underlying managers are actually selecting, the kind of best of breed managers in each particular asset class. So they're scouring the environment and picking out what they believe are to be the top performing Aussie equity managers or international managers and blending them together and then just doing the asset allocation.
Now, Sally-Ann, for the big question, how have these funds performed?
Well, over the last 2 years, the news has not been good, Christine. So most people's superannuation statements would actually be in the red. So perhaps rather than opening it and getting disappointed, I would just put it in the bottom drawer and hope for better times. And in the last 2 to 3 months, or July's been a very good month, we've seen growth assets rebound. So the main reason why most people's superannuation or multi-sector funds have not done well the last 2 years has been because of the downturn in growth assets. So as they start to come back up, which we've seen in the last couple of months, Aussie equities have had a great couple of months, so has international equities, and we've also seen listed property trusts start to rebound. So that is starting to feed into, we've had a couple of months of positive numbers, but again, if you look over the year, or the year to date, I think the multi-sector growth funds are still down around about 9 to 10% on average. But as I said, slowly kind of improving, and if we continue to get the next 2 to 3 months of some good returns coming through from equities and from listed properties, then I think we'll start to see some turnaround in some of those multi-sector fund returns.
Have there been any standout performers?
If you were to look at like the 30 June numbers, it was, some managers have done very well. I guess the two main ingredients for a manager to do well or a multi-sector fund to do well is really first and foremost their asset allocation. So those managers last financial year that were underweight growth assets, that's equities or property trusts, would have probably performed better than their peers. And also those managers that were perhaps overweight cash, had higher allocations to cash, also would have not had such large negative numbers. Managers can also add value through, if they've got a strong equity team behind their equity capability, then through stock picking, etc., they can kind of outperform as well. But typically, when you look across a range of multi-sector funds, it's really the asset allocation and the expertise behind that asset allocation that kind of differentiates the good performers from the bad performers, particularly in this environment where we've seen growth assets in particular underperform the last 2 years.
And what are the critical factors that investors need to look at when investing in multi-sector funds? Again,
if you're looking at a single manager, you really want a single manager that has good asset allocation capabilities, and also that is strong, probably more strong in their equity side. So if they've got a team of equity people that are offering good alpha, then the chances are they are going to feed that through into their multi-sector returns. And then on the multi-manager side, there's a lot of multi-managers out there. I guess it again comes down to their ability to be able to pick the managers that are going to offer good alpha, and so investors are going to get some returns over and above the peer group.
Given that many superannuation funds use multi-sector funds as a default option, should investors stick with these funds?
No, I don't think now's the time to do that. I mean, obviously people have been disappointed by the returns over the last 2 years, but I think the important thing is investors should keep the faith, and now is probably not a bad time to come in and start topping up your super contributions to kind of make back some of the losses that we have experienced in the last 2 years. I mean, the last quarter we've seen some nice positive returns coming back through, so I think it is time to start putting your toe back in the water and topping up your super contributions.
Sally Ann, thank you so much for your time.
Pleasure.